Hello. How to fill out Form 1065 U.S. Return of Partnership Income for 2023. If you have LLC with multiple partners, chances are you'll be required to file Form 1065. So if you are required to file 1065 for your business for 2023, I think it's a good idea to use a tax software to file your tax return. However, you could pull Form 1065 from IRS website to quickly put your financial data in it to have an idea what you'll be expecting by the time you are done using the software to file the return. So to do that, you will, under irs.gov, you'll just on the search bar, you'll tap 1065 for instance, and we can just scroll down and click, and you'll be able to find the form that you might need. So you'll need 1065. It's good idea to download the instructions for Form 1065 as well, so that you can read through, highlight things that you might need to reference while filing. And you might probably need a Schedule B1 if any one of the partners is on the business 50% or more, and a Schedule K-1 as well. So those are the forms that are by default you might need, but some other forms might be needed depending on your business model as well. Let's get started. We already download our Form 1065 and we have the instruction as well. We have the instruction and we have 1065. So Form 1065 for 2023, box or part A, principal business activity. In this example though, we can just put retailer, and I like to use cap and business, product or service. Let's just put home and living product. Don't know if you will have space for that. Household product, why not? Okay, so business code. For the business code number, we do have a few videos on how to find the business code for your business. But if your business, if it's not the first year you are filing for your business, you could use the number you used the previous year. However, it might be a good idea to double check that number to make sure it's still valid. So to do that, it'll be good to go at the end of the instructions for Form 1065 to find the code for principal business activity and principal product or service. And if you are a non-retailer, they change it last year or so. Non-retailer do not have, people that sell online, they don't have brick and mortar, they do not have a code number for that anymore. They will want you to use any number that is more tailored to the type of business you have, whether you have a brick and mortar or you sell online. So they have some instructions there to specify and to describe that. So we'll go look for retailer section to see what we are going to find. And non-store retailer sell all type of merchandise using such method as internet, So if you sell online, you'll fit that criteria. And they say Those type of retailers should select the PBA associated with their primary line of products sold. And they, at the beginning, they describe, how to select the right code, so you can read that as well. But at the beginning, I just pick one number and I just went with it. But again, if your business model change, I think it will be okay to change the number as well. Or if you are using a number that is not in the list anymore, might be the right time to change it as well. But they do describe it. So nothing here saying you shouldn't change it or you should change it. So you just can read it and see what best fits your business model, especially if that's your first year starting. You want to think it through and pick a number that can be broad enough to encompass any other activity that you might want it to branch out to. That'll just be my personal advice. So we are going to look for retailer, and I'm seeing retail trade at the left here. Then I'm going to scroll to see home and living, selling, household products, handmade products. Make it and sell it is what we are going to have as idea, a simple idea to work with. So we have general merchandise retailer here, and then we have department store, and we have warehouse clubs, super center, and other general merchandise retailer. So frankly, I like the one that will say other. It's kind of broad, but again, department store is kind of broad as well, because department store, they tend to sell different type of products. So we could use the first one in this example. So there is 4 there that I didn't pick. So I'm going to put 4 and then I'm going to paste the rest. So 4, 55, 11, 10. Okay, so now that we have that number, you will enter your partnership name the way you file it with your state. So in this example, we are just going to put business name LLC and then the address. So we are just going to put some numbers. You'll put the city, the state, and the zip code. So employer identification number, you will make sure you put the number, and let's just go with some numbers here. Date the business started, we are going to use an example. And total assets, we can leave it. They say see instruction. So there is some condition that you may not need to enter the assets, but it's good to have a balance sheet for your business, so that just for financial good financial practices. But again, the software will know when to put a number there for you or not. So check applicable boxes. So if nothing there is applicable to your business, you leave it alone. In this example, we are going to leave it alone, assuming the business is not new, and you can see the date we are working with. Check accounting method, we are going to check cash here, but if yours is the accrual, whatever you chose, that's what you'll stick with. You do not change your accounting method without filing with IRS to request approval for that. And there is a form for that as well. Let me see if I'll be able to find the form here. that is the instruction, but that will be Form 1115. Let me see. If I pull a 3.11.5. Okay, I only have the instruction here. .3.11. In fact, we can go to IRS website and we can search the form there. 3.11.5. So if you want to change your accounting method, you will read the instruction. They have instruction as well, and you will complete this form and pretty much based following the instruction advice to go through. But that's pretty much, you know, application for change in accounting method. So, but when you start your business, you will choose. Number of Schedule K-1 attach one for each person who was a partner at any time during the year. In this example, we are going to work with 2. Check if Schedule C and M3 are attached. We are not going to check it just here. But if after completing Schedule B, where they have questions, if you are required to file those, then it's a good idea to come back and check it. But again, when you are using a software, the software will check it automatically for you. That's why using the software can save you time. You enter your things once and it will be putting them where you need to duplicate numbers. It will put them there for you on those different forms that those numbers should go to. And if you are using the same software year after year, you won't have to keep putting your business name, address, so forth in the tax software. It'll be able to save those information. You just have to double check it for accuracy. So part 1, Form 1065, part 1, income. Line 1, gross receipt or sale, less return and allowances, and then we'll have the balance, which will be the difference between A and B. So we are going to use inventory in this, since we choose a retailer that stipulate that we are or engineer that we have physical products. Therefore, there is intense we might have inventory. So at this point, it'll be good to go to your finances to pull your financial data. So it's a good idea to have your financial data ready that you can use to do this draft filing, if you want to do the draft filing before you start using the software to actually file. But if you are using the software right from the start, it's good to have your finances ready, your financial data ready for the year. That way you can just pull your numbers from there as the software needs it. So we are looking for revenue. Therefore, we'll go to inventory and sales worksheet. And by the way, you can find that inventory and sales worksheet at ninasoap.com. And it is free, under free download, but we do have spreadsheet we sell at liberdownload.com as well. So on our blog, you'll go to, from the main page, you'll go to free download section. And if you do not have a software to track your inventory, to manage your inventory and your sales, you can just scroll through and you'll be able to find, we have some versions that you can work with. You can see which one match your business model well. And the difference between the two is because one allow you to apply sales tax on services for your state, and the second one allow you to now apply sales tax, state sales tax on services. Because for instance, in our state, there are some services that sales tax is applied to and some that is not. So it's good to check your state's website for those, but I just prefer to just apply sales tax on services sold to residents from our states buying from our business, if that makes sense. So okay, so now that I think our spreadsheet should be open by now. And we will be able to find the gross receipt in this example. The gross receipt is 2596.88. And if you are designing your spreadsheet yourself, you can just see the way the form you are going to file for your business is structured, and design your spreadsheet in a way to be able to pull your data to be able to to file your return. So 2596.88. So we will put it on A 2596.88. Well, it's allowing me to do that. Let's see. Okay, but it needs to be rounded, so 7. And if any row is not applicable to you, or is 0, you just leave it blank. So in this example, 2597, we can double check it again. 2597 return, we do not have any return, and therefore line 1C will be this minus 0, and that will give me 2597. So 2, cost of goods sold. So since we have inventory, we'll go back to our inventory spreadsheet to be able to find our cost of goods sold. So if you are tracking inventory, you will be required to file Form 1125A to report your beginning inventory, purchases during the year, and year-end inventory to find the cost of goods. So that will go online too. We do have a video that went in detail on that explain it. So we are going to quickly pull tax form 1125A. I can search it as well. Okay, we can just copy this, and we can go to our file if I don't have it yet. Yeah, we can just paste it there. So when you are using the tax software, when you click on a, I think usually if you are using it as a client, it's going to be in the interview mode. Therefore, as it asks questions, it will automatically pull those answers that you are giving, data that you are giving in the right form for you. But if you are using the form mode of the tax software, then when you click on a line, it's going to automatically, depending on the software, it might give you a folder to click on, and that folder will take you to the form you need to complete. Again, I'm just talking based on one software that I use, but yeah, I think every software will have their own way of doing that. So here we are going to put the business name and the identification number, if we can remember what we used before, and inventory at the beginning of the year. If that's your first year being in the business, chances are your January 1st 2023 inventory will be 0. But if it's not the first year you are being in business, and then therefore you need to use your January 31st of last year, which will be the same as December 31st last year year-end inventory, which will be the same as January 1st of the year you are filing for. Okay, so in this example, since we are filing for 2023, if your business is not new, your inventory at the beginning of the year will be December 31st 2022 year-end inventory, which should be the same as January 1st 2023 beginning of inventory. That number should be on line 1, and if you are using the tax software, it will automatically pull it if you use that same tax for the previous year. And I think sometimes software allow you to import from other tax software or so. But in this, we are going to go and find what we have in our example here, and I'm going to make this a little bit small. And I don't know if I'll be able to do both. So our beginning of year is going to be A044, and we can add the cents as well. So that means we'll go to that column to put the cents. So line 2, purchases. Line 2, purchases is not that clear, and dry. The way I like to do it is purchases during the year, which will be raw materials if you handmade things, minus out of inventory of raw materials plus the value of or the cost of your finished products that you put back in inventory. So when you buy raw materials, you use them to make finished products. So you have to do the same thing to your inventory. That means you bought raw material, it is an addition to your inventory, and then you took some out, which will be a subtraction from your inventory, and then you make finished products, and those finished products pretty much will have about the cost to those finished products will be about the same as what you took out of inventory if you don't add other costs to it. And then you put them back to your inventory, that will be another addition. So that means my purchases during the year is going to take all those 3 factors in consideration, and that in this example is A8036. So I'm going to use A8036. Cost of labor, I'm not going to include it here. Line 3, it's not applicable to this one. 5, other costs, attach a statement. If you put something on that line, it will attach a statement. Line 5, total of line 1 to 5. So total of those two 8044.44 plus AA 0.36 will give 94.20. Let's move this to this area. Oh, we do have it here too. So if we know the right line that we need to be on is line 6. So A92479. Okay, so line 7, year-end inventory. So year-end inventory on our inventory record, year-end inventory is 7970.43. 7970.43. Cost of goods sold will be line 6 minus line 7. 8924.79 minus 7970.43, and it's going to be 954.36. Okay, so 954. So we will go back to, and we can see it as well, cost of goods sold in this example. So we are not done with this form, so check all that qualify. So we'll check that cost, and B, is there any written or subnormal? It's good to check yes if you are keeping track of your inventory, and if the LIFO inventory method was used and we didn't use it, so we leave it alone, and we didn't use that either. Pretty much that means last in first out. It's good to use FIFO, first in first out. Is term of cost. When you have multiple raw material purchased at different time frame, when you are taking it out of inventory to make finished products, the cost you are going to associate with that finished product, if you didn't use all the raw material that you purchased for that product, it's good to use the cost of the first items that you put in the inventory if you purchase them at different prices. So that will be first in first out. So when you are selling those finished products, the cost of that good sold should be the cost of the first finished product you make. If you made that finished product multiple times during the year and the cost associated with that is different, it's good to use the first that you made, the cost associated with it, the quantity of those that you made that first time. It's good to take your product sold out of that batch, so that it will be first in first out. If you are using last in first out method, you will check that box and you'll have more paperwork to work with. So line E, if the property is produced or acquired for resale, do the rule of apply that. So for this one I'm just going to say no, but if it apply to you, you might want to read the instruction on it. The instruction is below. Was there any change in determining the quantity cost of valuation between opening and closing inventory? I'm just going to say no, but if you say yes, then you have attachment to add to explain it. But then you can just see the information that they have below, but I'm not going to go too much into that. But yeah, now we'll take our number from here and we'll go to our form 1065 954, I believe, and we will add it. Gross profit. So gross profit here, and so gross profit here, we are going to do subtraction of line 1C and line 2. So we are going to pull this, and that is going to be 2597 minus 954, and that will give me 1643. 1643. So things are, you are going to round on the main form, and the software of course will do it for you. Even if you add the numbers with decimal, the software will be able to round it for you. So ordinary income or loss from other partnership estates. And again, in case I didn't mention about, keep in mind that if your business activity is active business activity, that's when you will put your numbers on the page 1. And if you, and what is considered business activity, you can read it in the instruction. So I'm not sure I'll be able to find that quickly. Pretty much they're explaining what is now a business activity, but I'm looking for what is considered a business activity. So let's go up a little bit more here, and you can find those around between page 10 and 17 or so. And it's good to know what is portfolio income, what is considered passive activity, and what is considered active business activity. So the following aren't passive activity: trade or business activity in which the partner materially participates during the year. But this is related to the partner, not so much to the business itself. But let me see. They should need to explain what not a business activity is though in this. Okay, trade or business activity. Great. Well, can I highlight that? A trade or a business activity is an activity other than rental activity or activity treated as incidental to an activity of holding property for investment that involves the conduct of a trade or business within the meaning of section 162. And if you just type that says section 162 and Google it, you should be able to read about it. So it's conducted in anticipation for starting a trade or business or involving research and so forth. So if the partner doesn't materially participate in the activity, a trade or business activity conducted through a partnership is generally a passive activity of the partner. In that case, though, the trade or the business is a trade or a business for the business, but not so much to that partner that didn't participate in it. So you will still put your data on page 1 of 1065, and the profit or loss from that page 1 will go on schedule K. Line 1 will get to it, and it will go on box 1 of schedule K1 as well. They own the times the ownership percentage for that partner. So that partner portion will go on in box 1 as well. However, you can add an attachment to mention that it is a passive activity for that partner, or that partner, when that partner is filing 1040, that partner will be able to select the right should be able to make that number at the right spot, whether that partner materially participate in the business or not. So the software the partner is using to file his or her 1040 will be able to put that number on boss one at the right spot. So pretty much if that is a loss, that partner that didn't participate in the business will not be able to deduct that loss against a W-2 income, for instance. It can only deduct it against, apply against a carryover from previous year profit from passive activity that that partner has. So that's the way it works, and it won't be able to deduct that against a portfolio income either. But again, if when you read the instruction, you'll be able to understand it more in detail. So each partner must determine if the partner materially participate in an activity. As a result, while the partnership ordinary business income or loss is reported on page 1 of 1065, the specific income and deduction from each separate trade or business activity must be reported on attached statement for Form 1065. Similarly, while each partner distributive share of the partnership ordinary business income or loss is reported in box 1 of Schedule K-1, each partner distributive share of income and deduction for each trade or business activity must be reported on attached statement to each Schedule K-1, and then they pretty much have those. So you can see passive activity information as well. But there are some instances that rental property might be considered active. So they have things that you can read if you have a rental property. Many rental property will have L.L.C. So to consider a rental property as now a passive activity, any rental activity, a rental real estate activity in which the partner materially participated in. So what we'll consider is if the partner met both of the following conditions: more than half the personal service the partner performed in trade or business were performed in real property, trade or business in which the partner materially participates. So pretty much the number of hours you spend on your business, more than half of it, of personal service that you perform in it, should be more than half of the personal service the partner were performed in real property, trade or business in which the partner materially participates. So more than half of personal services that you provided should be performed in those three sections, either one of those three sections. So real property, trade or business in which you materially participate in. So the partner perform more than 750 hours or services in real property, trade or business in which the partner materially participates. So you have to work more than 750 hours during the year, and more than half of the personal services that you perform, services provided, should be performed in that. So pretty much, you can read it and see how it works with you. And then they advise not to combine spouses together, or if you want to combine it, you can read about it as well. So now they went forward to explain what that will entail. So a real property, trade or business. So pretty much, so the way I understood it though is the business you have. If you have rental real estate and some other things going on together, you have to work 750 hours or more in that real property trade, and more than half will of whatever time you spend on your business as a whole, more than half of it should be related to that real estate property trade that you have. It will help you track. You might want to track your hours to be able to um, know if you are really within, if you meet that requirement. So a real property trade or business is a real property development, redevelopment, construction, reconstruction, acquisition, conversion, rental, operation, management. So rental, operation, management, leasing. I think 1, 2, 3, 4 could be applied to rental property businesses if you manage your own rental. So, and yeah, so I think that is included. So a real property trade include all of that, or brokerage trade or business. So services the partner perform as an employee aren't treated as performed in a real property trade or business unless the partner owns more than 5% of the stock or more than 5% of the capital or profit interest in the employer. So yeah, it is good for you to read it through if you have rental property and you want to treat your rental property as a trade or a business rather than a passive activity. But then they have, an activity of trading. So I am not going to continue reading that. But yeah, you can use, you can design a spreadsheet to track your hours that you are working, and you can design it in a way that you'll be able to, track what portion of your time is spent in which activity in the business. And depending on your this business model, you can adjust it to mirror what you are trying to track as well. If you don't have time to design your own, we do have at Liberman Download, we do have, let me see, under shop, we do have a time log that you can purchase as well. Is in there somewhere there, but I can show you the way I track. Let me see the way I track mine. If that can give you an idea how you can design your own. And we do have one at Liberman Download. For purchase. So let's go back to our record here and see. And we are done with our inventory and sales spreadsheet. So I'm going to close it. But yeah, you can pretty much you can design your own, or you can purchase one from libermandownload.com. But we do have, you can have function tab that you can download. You can summarize hours by person or by principal function or activities as well, to pretty much see how much time you are spending in each area of your business. One way to actually see how much time you are spending in your own business, and if it is needed for your and by department. So this version is not for selling yet. It's going to be there, but we do have another version there as well. But yeah, you'll be able to design it to track your hours, just in case you need it to as a reference to to see if your rental property in this case can be classified as a trade. But personally, I would prefer to just keep the rental property as a passive activity, since IRS trying to consider that as a passive activity. So they have more on it on rental activities here that you can read as well. But anyway, so I think we are done explaining that. And while we are there though, if you have a rental property, you are not going to put your information on page 1. Like your income and expenses are not going to go straight on 1065 page 1. They will go straight on schedule K, and we can scroll and see schedule K, and that'll be the profit or loss from form 8825 that you'll put on line 2 of schedule K. Only ordinary business or trade or business activity will go on page 1. On page 1. And they put it only trade or business income and expenses. So 8825, we can open it for you to take a look at how it looks like. So I think it's a little bit, okay, okay, so you'll be able to put your property information, the revenue by property. So it's good to track those by property. If you know you are going to file those forms, it's good to take a look at the form. Sometimes it helps to know how you should track your data, your financial data as well. So you'll manage your property to know how much everyone is bringing in and what the costs, the expenses are as well. And it's allowing you to put the rent and then the expenses associated to each one of those properties. Even depreciation will go on this form. Wage and salary associated with utilities, pretty much everything will go on this form. And those expenses, they have original business or trade and business version on page 1. Opening the wrong one. On page 1, they have version here for trade or people, service providers or active business activity owners. They have a deduction space for it. For rental property on Form ADA 25, they have the rent for the revenue portion, and then they have the expenses portion as well for all your expenses to go on, and the profit or loss will go on line 16 from line 2. Okay, oh sorry, I'm looking for, I'm kind of surprised they are not saying where that will. So the total from line 21 will go on Form 1065 or 1120S Schedule K line 2. And we can see 1065 Schedule K line 2, and on 1120S Schedule K line 2, the profit or loss. Okay. If you have a rental activity, like other than real estate, other gross rental income or loss, they have line 3 for you to put the income, and then expenses from other rental activity. Add attachments, you'll put the expenses related. I'm kind of surprised they put income or loss though. Is if you are going to do the profit, the income against the expenses, and use the profit to put on line 3, but it seems like it is the income and then the expenses, and line 3C will be other net rental income or loss, which will be on line 3C. And again, if you are in that type of business, don't know if you'll be able to find it quickly. Brace yourself, I'm going to scroll fast. But when you are filing and you do not understand a section, it's good to just go through the instruction and read about it to see, if there is something there that if the instruction is clear enough for you to be able to understand it. So that will be on page 35. Enter on line 3A gross income from rental activity other than those reported on Form ADA 25. Include on line 3 gain or loss from Form 4797 line 17 that is attributable to the sale, exchange, or involuntary conversion of an asset used in a rental activity other than rental real estate activity. And then on line 3B, the deductible expense of the activity. Attach a statement to your Form 1065. And 3C will be, the profit or the loss. So, and they will go on Schedule K1 as well. So, and you can read on the guaranteed things, but we are not on that session. So I'm going to go back. So now, and another things I like to, so the guaranteed payment, you'll have it here as well. So it will go on Schedule K, and in fact, we are talking more about Schedule K here. So I think just to know that royalty income will go on Schedule K. Now on page 1 of 1065, dividend and interest will go straight on Schedule K as well. So now that we know where our incomes and interest income, dividend are considered portfolio income. So it's good to know what portfolio income royalty could be included as well. So portfolio income, real estate income, and other rental activity, they go through on Schedule K. They are considered somewhat passive. And trade and business income and expense related goes on page 1 of 1065. And in this, since we are talking about retailer, we are talking about active business activities. So we are going to leave line 4, ordinary income loss from partnership. We are going to leave it alone. Net farm profits, it's not applicable to us. Net gain from Form 4797, you can read it to see which portion should go on line 6 here. Sometimes when you claim early depreciation or special depreciation or how do you call that? Section 197, is it what that is? We'll come across it again somewhere on Schedule K. To expense your depreciable asset the first year that you place it in service, instead of depreciating throughout the year. If you didn't use it for the time frame that you're supposed to depreciate it, the early depreciation that you took could be added back as income, and it could go on line 6. It will go on a form before it will show up on line 6. And again, you'll be able to read the instruction on that. Brace yourself. I'm going to go a little bit up here. And include only ordinary gain or loss from the sales, exchange, or involuntary conversion of assets used in a trade or business. That portion will go on page 1. So the one that is related to real estate will go on Schedule K, and they have spot for it there. Okay. So now we are going to leave it blank because it's not applicable to us. Other income is not applicable to us, but then if you read it, you'll know what other income entails, and they will be able to explain it in detail there. Line 8, total income or loss, is going to be the sum of 3 all the way to 7, and it's going to be 1643. Salary. So again, you will need to pull your payroll data, and if you do not have a payroll, if you are not using a payroll software to track your payroll, you can design a spreadsheet to do that. We do have free payroll worksheet that you can use. I'm going to open the example journal here, but at ninasoap.com, under free download, we do have multiple payroll option to choose from, and the free payroll spreadsheet Form 940B2 to F2 can allow you to track your payroll, to file Form 940, Form 944, Form 941, and to file W2 and W3 with SSA, Social Security Administration. And if you are monthly, your deposit schedule is monthly deposit schedule, you'll be able to use it. If you are a bi-weekly scheduled depositor, it will not work for you. Although you can modify it, it track on a daily basis, but it does not have a summary tab to pull the data on a daily basis, to summarize the daily entries, the daily payroll. But if you are a bi-weekly depositor, when you are filing your employment tax return, you will file a form that requires you to put your daily payroll liability on it. So it will not work for you. But if you are a monthly depositor, it will work for you because it tracks your data at the quarterly level and at the monthly level. But you can take a look at it to see if it can work for your business model. That's if you have payroll. If you are an L.L.C. filing 1065, you, the partner working in the business, you are not an employee of your own business. But if you hire other people to work in your business, you'll pay them salary. So their wages will go on line 9. I'm going to use an example here and put 200. And something about it is, technically when you are putting the payroll, if you pay the income tax withheld from the employee's salary, Social Security and Medicare withheld from the employee's salary, you can put that gross wages on line 9 of 1065. And that means where you have taxes and licenses, you'll only put your unemployment tax, your employer, a portion of Social Security and Medicare that you paid. If you put the take-home pay on line 9, then on line 14 you'll put your unemployment tax, your employer and employee total portion of Medicare and Social Security and employee income tax withheld, because you withheld those and you deposited to IRS. So if you didn't include what you withheld from the employee salary, if you didn't include it on line 9, then you can include it on line 14. But if you include that means you use the take-home pay on line 9. But if you use the gross wages before tax on line 9, you just make sure you do not put the employee portion of those taxes that you withheld. Make sure you do not put it on line 14. Otherwise, it will be like you are doubling numbers, duplicating numbers. Just keep an eye on that. In this example, though, the bookkeeping that I open, I'm going to close this one. The bookkeeping that I open, I have the payroll, just the take-home pay. Therefore, I'm going to just use that. But I don't think that's the right way of doing it, though, unless you are using the cash method and while you withheld, you didn't deposit it that year to IRS. But yeah, so just keep that in mind. And then I'm going to, so that means that number will have both employee and employer portion of the tax. Just know that it's not one way of doing it. And then you have guaranteed payment to the partners. You have repair and maintenance. You have bad debt, rent, tax and licenses. I believe it's 138 or 139. We can check it again. Let me make a little bit. 139. Okay, the spreadsheet is adding up. And interest, we leave a blank. Depreciation, if required, attach form 4562. Okay. So we are going to go back. So I'm going to close this one for now. And we are going to work on line 16A, depreciation. if you purchase an asset during the year that you are filing for and you place in service during that year, you will file Form 4562 depreciation. How to depreciation and Form 4562, how to depreciation amortization form. So I'm going to, it's taking me back here. Open both depreciation worksheets, and we are going to, I'm not seeing it here, but we place some, in this example we place some assets in service during the year, therefore we need to complete Form 4562. So we are going to copy it. And we'll go put in our folder. And let's open it. It's good to track your assets if you depreciate them. I do not claim Section 170, Section 197. I'm confusing numbers now. So I'm seeing too many numbers that I'm getting confused. But if you are claiming them, I think it's still a good idea to track your assets just in case of IRS has a question for you. You have answers for them. Okay, so how do you depreciate a business asset? We are going to depreciate using GDS, General Depreciation System, under the MACO. So how do you depreciate a business asset? It's good to track your business asset that you purchase, record the date you purchased them and how much you pay for them, including the tax, the state sales tax that you paid, and the date you placed them in service. So to depreciate the assets, it is a good idea you have a basic understanding of how that works. Again, using a tax software to depreciate, they will have some question. The tax software will have some question for you. What the item is, when you purchase it or place it in service, the cost, and based on your answer, the software will be able to determine the conversion to use, and if the type of the recovery period, for sure the classification of property as well, the recovery period. And by default, the software will choose the depreciation method as well. And the one that will give you the highest deduction will be 200 dB. But I just like to use straight line. Therefore, I actually choose straight line. But again, I don't know if the software should be able to give you option to give you the opportunity to choose. But by default, the software will choose the highest one that will give you a good amount of deduction. But I just like to go with straight line so that and keep it straight. But yeah, so now that we know those things, let's go to the instruction. So you will need Form 946, no, Publication 946, how to depreciate property. You will need instructions for Form 4562, depreciation and amortization. Okay. So on note that you have a record of your assets when you purchase them. On the how to depreciate a property publication 946, we are going to go to the bottom of it, and let me see if I use 100. Okay. At the end of the publication, there is two tables, table B1 and table B2. And there is a little instruction before table B1, and it's good to read that instruction. So what you all boil down to is when you have a business and you purchase an asset to use in the business and you want to depreciate it for the number of years that that asset is depreciable for, there is two tables that you can use to determine how long you need to depreciate the assets. So if the asset is listed in the table B1, you will check table B2. Table B2 has the list of businesses, activities, and underneath each one of them, they have a short description of the type of asset they use in that in that business activity, with that business activity. So if your asset is listed in that table B2, if your business activity is listed in that table B2 and the asset is described there, specifically listed, you will use the recovery period under table B2 for that asset. But if your business activity is listed but that particular asset is not spelled out, but that asset is listed in table B1, you'll use the recovery period of table B1. If the asset is not listed in table B1, but your business is listed in table B2 and the asset is spelled out in table B2, you use the recovery period from table B2. If the asset is not listed in table B1 and your business is listed in table B2 and the asset is not described in table B2, you will use table B2 recovery period. So they pretty much as describe it up. And just to make sure I didn't confuse you, let's read it together. You need to look at both table B1 and table B2 to find the correct recovery period. So generally, if the property is listed in table B1, you use the recovery period shown in that table. However, if the property is specifically listed in table B2 under the type of activity in which it is used, you use the recovery period listed under the activity in that table, meaning table B2. Use the tables in the order shown below to determine the recovery period of your depreciable property. Table B1. Check table B1 for a description of the property. If it is described in table B1, also check table B2 to find the activity in which the property is being used. If the activity is described in table B2, read the text. Under the title, to determine if the property is specifically included in the asset class. If it is, use the recovery period shown in the appropriate column of table B2 following the description of the activity. If the activity is not described in table B2, or if the activity is described but the property either is not specifically included in or is specifically excluded from that asset class, then use the recovery period shown in the appropriate column following the description of the property in table B1. And they have example here that is useful as well to read. Table B2, if the property is not listed in table B1, check table B2 to find the activity in which the property is being used and use the recovery period shown in the appropriate column following the description. And then they have a section that if the property is in either table, if your activity is not in table B2 and the property is not in table B1, they have certain property for which recovery period assigned. You will use that, but again, I'm not going to concern much about that one. But let's start. So the first thing that we are going to use is not really applicable to those. So it's going to be a graphic design computer software. It's considered other than 197. Okay, so if this one is using 197, so this section, let's go back to our depreciated assets, because when I was talking earlier, okay, so it's 179 section, like where you can expense the full amount. So I'll reverse the numbers, but okay, so but yeah, I do not claim section 179. I depreciate, so that's why I'm going to talk about depreciation. But again, if you are going to use section 179, where you will deduct the full amount of the assets in the first year that you place in service, it'll go on part 1 of 4562, and there is a limit. The limits you can depreciate as well. You can claim like that, but the software will be able to guide you on that. And I think by default, software tend to claim this for you if you qualify. But just keep that in mind. If it's just going to be too much of expense to the point that your business will have a loss, it's up to you. I don't think it's necessary. Or if your business is already has a loss, I don't think you really have a reason to claim that section 179. It's good to claim it if you have a big profits. It can lower that expenses, but you only claim it the first year you placed an asset in service, though. Just keep that in mind. I just don't use it, and I just keep one way of depreciating assets to just make it simple, since I'm filing the business return myself. Okay, so we are talking about the first asset, and the first asset is a graphic, is off the shelf. Let's just consider that as off the shelf software placed in service at the beginning of the year based on IRS instructions, which is in the instruction for Form 4562, and I believe is going to be page 5 or so. You can see the limits there for section 179. You'll be able to see that. You'll be on line 16. But intangible property other than section 197, intangible, including the following: computer software, use a straight line method over 36 months. So, and based on this, that means it's going to be, let's go back. I didn't use it in this example though, but we can, let me duplicate this form and this tab. So as for that one, they say 36 months. So I put 36 months. They say to do that for 36 months is 3 years. So in this example, the way I did it, I just trying to use the regular depreciation criteria for it as well. And by default, I use a half year, but based on the instruction, the best way to do that, in my opinion, since it was used at the beginning of January, so pretty much it was used for 12 months that first year. Therefore, if we keep that 36, I'm going to change this out of here, and instead of using 6, I will use 12. And then the last year will be 12 as well, because they say to depreciate it for 36 months. You'll take into consideration the number of months you use it the first year. If you use it the way I did it earlier, I put 6 months because I try to use half a year for all of them, because they all qualify for half year depreciation method, and I just use that. But the best way to do this one, because it's not going to go on the line that the others will go on the depreciation form, the best way to do this one, it will be to just use the monthly or full month convention. Use that 36 month and use it from January all the way to December is 12. So 36 month, the number of months you use it the first year divided by that 36 month. So if you use it for 2 months, meaning you put it in service in November, early November, that means the last year will have the remaining 10 months for the total to be 100%. So I should not have anything in this one. You see, that's why it's good to do that. You should have 100%. 36 months, if I took 12 months the first year, and the second year another 12 months, the third year another 12 months, that'll be 36. Therefore 3 years. But the way I did it before, I took 6 months the first year, therefore I took 6 months the last year. That make it 4 years. But I think the best way to do this one will be to go with that 36 months, and instead of doing half year, since I start using at the beginning of the year, to use 12. In that regard though, by doing that, is going to affect the first year depreciation amount. If I go back to the way it was before, I took a half of it, and the other half will be the last year, so that I can pour in the same side of the depreciation form. But so now that we have this one, we can actually just take this number and go put on the form. So this is going to be 35. If we go to the depreciation form, it's going to be on line 16. Again, first let's put some stuff here. We'll put business name L.L.C. business activity, let's just put retail, and again the weird identification number we have been using. And we are now going to claim section 179. We are now going to claim special depreciation allowance, but in that section though, they have other depreciation including ACRS, and that's where we'll put this number 35. The way I like to do it though is now using that, but just put it under section B, 3-year period. 3 years 36 as well. That's why I converted to half year, because the other assets qualify for half year by now being mid-quarter for things to be in this session though, it was going to be either mid-quarter or half year, and only real estate will be mid-month, and then you have pretty much going down. So half year or mid-quarter convention are the options here, and I like to go with half year. Therefore, I don't like to buy business assets the last quarter of the year. Am I saying it right? Yeah. Because if you buy asset the last quarter of the year, you have to make sure the cost of those assets that you place in service that year, 40%, the total is not more than, it's less than 40% or so for you not to use mid-quarter and to use half year. But if you put 40% or more assets in the last quarter of the year, October, November, December, compared to the whole year, you'll be using mid-quarter. So that means you need to track, by tracking when you place the asset in service, you'll be able to determine the mid-quarter for each one of those assets. That's why I do have, the quarter session to list them as well. But there's instances that, let me see, that placing assets in the service the last quarter could make you have to choose mid-quarter for everything. Therefore, you'll need to know those quarters that you place the assets in service. So I just like to go with, I like to avoid that. Angelique, you cannot do laundry while I'm recording. So if you put your things in it, just leave it open. Otherwise, don't put your things in the machine yet. Thank you. So now we dealt with that first one. So now let's go back to the rest. So we have this one. So what I'm going to do, did you see this one that we just, because we have multiple, in fact, let's work with the rest first to fill up this form, to show you how this form is filled. So we have a USB. So if we go back to the publication 946, we'll check B1, table B1, and B1 here, if you read it, I'm kind of inclined to say that USB to plug into a computer, and it's called like external memory type, it can be included in those disk drive, disk file, and so forth. Therefore, I'm going to assume it is in table B1. Now let's go to table B2 to look for the business activity. Table B2, and those are the business activity. You can read through to look for your business type, but instead of scrolling, I'm just going to let's just do that this time. If you are having an issue finding a publication on a form on an IRS website, you can check nenasuk.com. On the right above the free download session, we do have publication session that we save links to IRS tax form, so you can check there to see if you can find the form or the publication you are looking for. the link should take you to the IRS page, the last version of the form of the publication. So we have 570 distributive trade or service. So include assets in a wholesale or retail trade or personal and professional services. So that pretty much include trade, business, services, everything, retail, word, and wholesale. So it does not specify USB, external, whatever that is, but therefore we'll go back to table B1 and we will use recovery period 5. The class life is 6 and the asset class is 0.12. So we'll go to our record and we will put 0.12 table B1, asset class 6, and if we continue, classification of property, 5-year property, recovery period is 5, and all of that came from that table B1, recovery period, and class life. So now we'll take that information that we put on here, we put the recovery period and then classification of period. You'll find that in the instruction. So we'll go back to the instruction and okay, it shouldn't be too far from here. Let's see. Determine the classification. So class life, I believe is 6 for this one. Class life 6. So when you go to the instruction, class life more than 4 but less than 10, it corresponds to classification 5-year property. So 5-year property, we put that on our spreadsheet. 5-year property. So knowing the 5-year property, although we already know that the recovery period is 5 because our publication told us that, but for confirmation, when we go to the instruction, taking the classification 5-year property, when we scroll up a little bit, we will find the recovery period. So classification 5-year property is for 5 years. So that means you depreciate for 5 years. So that's how it works. So now while we did that, let's do another one that is related. It is USB file transfer cable, and again we assume it's going to be the first table, again the peripheral computer, and the class year is going to be 6, date placed in service the 9, same month, 100% business use, and 5-year classification of property, 5-year property leading to 5-year. Okay, so now that we got those two out of the way, we'll go to microphone here. So microphone publication table B1 does not really list it. I mean, you might say it's a peripheral of a computer, but I don't know. So you can scroll on that first table B1 to read what is included, and the first 0011 is for furnitures, office furnitures, and then the second one is information system. But anyway, you can read it, but you can and see what is in there, and I'm going to assume it's not here. So if I assume it's not here, then I need to go to table B2, look for the business that is using it. The business that is using it is lease asset 57, asset class 57. The microphone is not listed here, specifically listed here. It is not listed in table B1. The business that is using it is listed. It is not listed in that business. Therefore, I'm going to go with the asset class, the class life related to that business activity. It is 9 and the recovery period is 5. So again, under GDS markups. So I'm going to go back to the spreadsheet and I'm going to put the type of depreciation system I'm using, 57.0 table B2, class life 9, 100% use, and the recovery period is 5. Is 5. But again, the classification of property related to year is 5 year, and the way to find that is taking, you see the asset class is 9. So taking the asset class that I recorded, if I go to the instruction, it's stated that anything less than 10 year is 5 year property classification, and recovery period associated with it is 5 years. So those information came from there. So that's how you will use those two, publication and instructions, to retrieve those information. So I have that, and the next one is a camera, and it's going to be the same thing. It's not in the it's now on that page 97, and we are going to do it with the tripod as well. It's not on the first table B1. Therefore, we'll go to table B2. The business that is using it is listed. Therefore, we'll use class life 9, recovery period 5. We'll record that on our spreadsheet. We'll go to the instruction, class 9, class life 9 is less than 10. Classification 5 year property. Convention related to that classification 5 year property is 5 years. Now that we have, and that is a tripod, that is a camera. So now that we have those information listed for those two, 5 year property, 5 year property, 5. Now we'll move to the next step, which will be which convention. We already know the recovery period to use, so we need to figure out which convention to use and which depreciation method to use. And you can find that I like to use the publication 946, and that will be appendix A. So let's go up a little bit, and I think I'm just going to use 50 here, but I think it's going to be 99. No, it's not 99. Let's use 70. So appendix A, macro percentage table guide, general depreciation and alternative depreciation system. So now that we have the recovery period, we have the macro system we want to use, we need to choose the depreciation method we want to use, and that will guide us to find, you know, the rate to use. So and in my case, I like to use straight line. So I'm just going to locate that. So I know that is GDS. The recovery period I know is 5. So if you are doing it, you want to use 200, for instance, you want to make sure your recovery period and the 200, and you have, then you'll use half year or mid quarter, whichever qualify for your business, if you didn't place 40% or more of assets in service during the year, in the last quarter, then you don't use mid-quarter. Therefore, you'll fall back to half quarter. And that means you will use the first row. And class life associated with it. And then you'll use that table. Because it does not matter the quarter, you'll use half life. That means 6 months the first year you'll depreciate, and the remaining 6 years you'll depreciate at the last year. So that will take a 5-year recovery period to 6, a 7-year to 8, because you'll take half depreciation the first year and the other half the last year. And in this case, I'm going to use straight line. Therefore, I'm going to look for straight line options that they have. They have half year and mid-quarter. So since I qualify for half year, I'm going to stay with that row. So GDS straight line. That means I'll put that on my spreadsheet. GDS. Let me see if we'll be able to see the taros as well. Half year. For half year, they say any class qualify. And then quarter placed in service, they say any quarter. And therefore, you will use one rate. The case is that you will need a mid-quarter though. Each quarter has its own rate to use. So I like to avoid as much as possible by now buying things the last quarter of the year for the business just because it's on sale. But again, you have to see which one works for you. The headache of the saving. But anyway, and that's just the first year that you'll go through that trouble. But if you are using the software, it'll be able to do it for you. But you still have to keep your dates you place in service to be able to, which you have to do anyway. So the software should be able to use the appropriate rate or whatever the software is using. So we are going to use A8. So I'm going to put that information in the spreadsheet. So we have convention half year, depreciation method, straight line, rate table A8, and we'll go copy that rate table and put it in. So we'll go to appendix A. We are already in appendix A. We'll just continue looking for A8 table. And I'm just going to speed that by doing 77, for instance, 75, okay, 73 or so, 73. Table A8, straight line method half year convention, and then they have, because for other years they have that too. So but now we are going to find what we are looking for, because you need your recovery period. So recovery period for us is 5. So we are going to use the year that say 5 for the recovery period. So 5, that means you are going to recover within 6 years. 1, 2, 3, 4, 5, 6. So if your recovery period is 7 years, you'll go to 7 colon and so forth. But ours is 5. Recovery period, you see, 5. And therefore, we are going to copy the rate and put there, and you can see 10, that means it's just a half of 20%. And the way it works is, because I'm using straight line, so something that needs to be depreciated for 5 years. 5 years is 60 months. So 1 year, which is 12 divided by 60 months, is 20. And 6 months of that is 10%. So that's pretty much the way it is working, the straight line. And that works well for that 3 year that the software was for as well. If I'm now taking half and I'm using month, and I use it for 12 months that year, so that otherwise the half year method will work for that software three years or 36 months. But so now this is copied and entered on the spreadsheet. You can see it went to rate 6. Yeah, so automatically the spreadsheet will use the rates and calculate the depreciation deduction for each one of those years that the asset will be depreciated for. And when you see that it's taking the rates times the original amount, the basis for depreciation, and the following year is going to do the same. Take the basis for depreciation when you place the asset in service times the second year rates. The basis for depreciation is not going to change because the rate is changing. So the third year is going to take that same depreciation, a basis for depreciation amount times the third year rates, and so forth. And when it's well done, that 114 should be fully depreciated within 6 years. 11448. So you will summarize everything, you'll sum everything to see if it totaled that original amount. If it didn't, if it does not, then something is wrong somewhere. But that's the way it works, this method. When the rate is for every year, you use the amount, the original amount that you are depreciating the cost. If it's fully 100% business use and you didn't take any other special depreciation or section 179, if you did, those needs to be taken out of it to find the basis for depreciation. And that basis for depreciation is what you are going to use term year 1 rate to find the deduction for year 1 terms, and that same basis for depreciation times year 2 rate to find year 2 depreciation deduction, and so forth. And now doing that, we know how much the depreciation will be for the first year. So, and again, everything is 5 years. So doing it by hand, we do not want to congregate everything. Therefore, they are going to go on different forms for the 562. But then we'll keep one that will be the sum of all those forms. So we are going to keep the one that we have line 16 filled for. We are going to keep it, and we are going to complete this one for, we are going to add different forms. So now that we are doing that, let's not forget line 17. We'll come back to it. So let's save it, and let's take this number. No, let's go back to our form, and I'm going to copy and paste, and we are just going to use this as a copy one, and I'm going to close this one. We'll come back to it, and I'm going to close this as well. We are going to close this one, and we will open the first one. So this one, we are now going to have any number or line 16, and we are going to complete, because we have multiple 5 years, we are going to complete it for that. So we are going to, for the first one, let's see here. The first one, 397, we are going to use 4. So that is 5-year property. So that will be section part 3, section B. So that will be 5-year property, and basis for depreciation is 4. And before I put the number, let's put this one. Recovery period is 5. The conversion is a half year, and the method is straight line. So let's save that. In fact, we should be able to do this on the original one as well, so that we have 2. So what I'm going to do is, let's open the original one that will have the summary of everything, and let's put 1 on it. So it's going to be recovery 5, conversion a half year, method straight line. This one will be 4, and the depreciation amount, excuse me, I'm going to put 1 because I know that I will have rounding issue. So I'm going to put 1 for this one. You can put 0 as well, but I'm going to put 1. Okay, so, and I will save it and close this one. So the second one that we are working on, I'm going to make a copy of this one. We can just call it templates. And the amount is 114. 114. The depreciation total is going to be 11. 11, and we will save. So this one will just have those depreciation on it with the top of the business name, activity type, and EIN will be on it, because you only have 1 row for 5-year property. If you are now going to aggregate, if you are now going to combine them, group them, you do not check that box. If you want to group them, since we all are 5-year property, if you click that, you can just put the total for all those assets that have the same recovery period, the same convention, and the same depreciation method. You can group them, and since ours has all 3, we could technically group them and put the total by total. I'm talking about the total cost and the total depreciation for that year. We can just put that on 1 row for it, but I do not want to group. And if you do not want to group, then you have multiple rows, multiple form, because you only have 1 row for per property year per form. So we are going to close this one and open a second one for the third asset. For the 4th asset, probably we might need also. And let's open this one. And that will be for 535, and we'll put 535, and the depreciation deduction will be 54. We will save it and we will close it, and we will open another one. Is 32, and the depreciation is 3. We will save it and we will close it. We will open another one. So if you claim section 179, you'll file this form 4562. If you didn't claim section 179 but you depreciate and you place asset in service during the first year, you'll file this form 4562. And CC4 and CIS. CC4 and CIS. We will save it and we will close it. Now we will go to the original one. We have line 16 for the intangible assets other than 197 intangible. We have part 3, line 17 for depreciable deduction, the depreciation deduction for asset placed in service in prior tax year. Line 17. So if your business is new, started in 2023 or so, for the start of the year you are filing for, then you won't have anything for line 17. But if your business is not new and you have asset placed in service prior year that you have been depreciating, it will go on line 17. So we will go to depreciation worksheet. And by the way, if you are looking for a worksheet to track your assets, you don't have time to design your own, and you're not using a software to track it, you can find this depreciation worksheet, and it has a portion for amortization as well. You can find it at liberdownload.com. We have few options to choose from, but the one that I'm using in this example is similar to this one, depreciation and amortization worksheet LD22D1, but we do have few to choose from as well, and I believe this one may not have amortization in it. This one may not have amortization but has multiple type of assets that can be depreciable. This one is for assets other than real estate and vehicle, is not suitable for it. The bottom one is more suitable for that one, but again you can check it to see which one if you want something like that. And this summary worksheet does not come with the templates. The one that I just showed you at Liberman download is just the one that will allow you to track your assets. and calculate the depreciation as well for them. And having the depreciation, when you use the publication 946 and the instruction for Form 4562, when you calculate the depreciation deduction, it is set, and you just, every year that you are filing taxes, you know how much your depreciation for that year is going to be. It's set. If you you continue using the asset, those are set. So you can have that in your record as well. So it's a good thing to track your depreciable assets if you are depreciating them. If you are expensing it or claiming Section 179, it's good to track your assets, but then you don't need to calculate depreciation every year for it since you already expensed it. So for that, we will go to for the prior year, the worksheet tends to work for me better, and then I will work with the number that I have here, and I need to make sure placed in service in prior year. So 542, we'll go back to our things here. We're going to use 542. Okay, and we are not going to check that because you are not going to group anything. We already have line 19B for section B, part 3, depreciation for business asset placed in service during the tax year we are filing for completed. We will scroll down to the summary, and we'll just complete the summary on one form. So lease property, we do not have lease property, is below, so we are going to leave that alone. Add line 22 total, add amount from line 12, 14 and 17. So line 12 is the section 179. $14, $17. What they mean by 14, 17, and 20? Oh, okay, line 14 through 17. That makes sense. Line 14 through 17. For special depreciation, we'll take our star software and this one, and then 19 and 20. Line 19 and 20. Okay, so now that we know what we need to sum, we'll take our calculator. Because the tax software, the way I adjusted for this example, I took 12 months instead of 6 months. My number is going to be a little bit different from the spreadsheet. So I'm going to use 35 plus 542 plus, okay, I'm going to write it down, is 577. And now we are going to go and summarize those. So we have 1 on here plus, okay, it's just doing it for us already. So let's go and let's click on this one. And it's good to double check your number to make sure you type them well. Plus 11 plus, and I'm going to close this one so that I can open the second one. $54 and we will close it. And open the next one. Oh, let's see here. Plus 3. And we will close it. plus 6. 652. So we will go to, and that 652 is a little bit different from here because of that 17. This let's go back. This amount here, the half of that is 17 something. So if we go back and we do equal shouldn't have done that. Okay, 34.98 divided by 2 for half, for 6 months, for half year. So equal 34.98 divided by 2. So if we take, if I just do equal this one plus this one, you can see it's 652. Yeah, 652. So that 652 will go to our, which I believe is our calculator, 652. It will go on line 22, 652. And you'll keep in mind, if you have line 12 in the total section 179, you want to be careful. This total 22 will now go on form 1065 or form 1120S. You'll have to take the amount that is related to line 12 section 179. You need to take it out of it and put it on schedule K. The software will do it automatically. Split, take line 22 amount, put it on schedule K for you, and put the depreciation amount on the depreciation row. But if you are, but in your draft that you are doing, the depreciation amount, which is power 2 and power 3, will go on the depreciation line. Either on form 8825 for rental property, or on form 1120S, or on form 1065. So now we will continue. Total assets shown above and placed in service during the current year. Okay, hold on. For assets shown above and placed in service during the current year, enter the portion of the basis attributed. Okay, so we'll leave that alone if it does not matter to us. And if you have a vehicle placed in service, you have part 5 to complete, and then you have amortization. And amortization, if you have an amortizable asset to amortize, you'll go to the instructions for form 94562, and brace yourself, I'm going to scroll a little bit fast. We'll go to the amortization section. It's good to know the code for the type of intangible assets you want to amortize, and each they have section that you'll have to use. And we can continue further down to see section 197 intangible. So they have startup and organization for 180 months to depreciate as well, and it has some code that you'll have to use if you didn't expense if you start the business the first year you start the business. You have the choice to claim up to a certain point for startup costs and organizational costs. If you pass that amount, I don't know the amount on top of my head, but I think it's around 5,000, but you have to do your own research on that. Anything above the threshold, you'll amortize it, and you'll amortize it for 180 months using the appropriate code for it. And certain section 197 intangible, they have the list of it for you to read to see what classify as a section 179 and for how long you amortize it. It is 15 years, 180 month, and they have code for it. So section 197 is a code, so you'll add that code. So if we go back to the amortization section, I believe this one might be okay. Hold on, I hope I didn't put the summary on the wrong one. Yes, I did. Okay, so let's take this 652 out of here and let's save it and close it. The summary is going to be on one page, and I like to put on the page that I complete other rows on. So 652. Okay, and we will on that same one I will put the amortization amount as well. So if you are amortizing, if you place assets in service that year, you will put the assets description, the date you place in service, the amount you pay for it, the code that I just showed you from the instructions for Form 4562, and the amortization period or percentage and amortization deduction for the year. And as an example, I can just show you on the spreadsheet what I tried to amortize here, which was a software that I could just have used that line 16 depreciated for 36 months, is just the same as amortization, but it's just not appropriate for amortization session since it does not have a code. They call it other than 197 intangible, even though it's an intangible asset. So what you'll do for your intangible asset though is for the amortization period, you'll put how long they say to amortize it. For the SAROCOP, for the 197 intangible, they say 180 month, so you'll put 180 for instance, or the percentage, and then the amortization period 180 month. So what you'll do is for the first year, you'll see when you place it in service, and here in this example though, placing it in service close to the end of November, that means we only use it for 1 month, therefore that's 1. And in the case you have 180 month, then that'll be 1 divided by 180. That'll give you a rate. So the second year is going to be 12 divided by 180, and you'll be doing that, and you'll have that 15 years colon, and then the amortization deduction will calculate based on those rates that you did. But just make sure that when you total your rates, it gives you 100%, and you can add colons to it. I don't know what yeah, I did this up to 8 here, but you can add more columns to it as well, and then calculate the things. And then the way it's going to calculate the deduction for you though is going to take that same amount, amortizable amount, times the first year rates, that same amortizable amount times the second year rate, to find the second year amortization deduction. So if I click on the first year, it's taking the first year rate times that amount. The second year deduction is taking the second year rate times the same amortizable amount, the original one. And the third year deduction is taking the third year rate times the same amortizable amount. That amount is not changing, it's just the rate that is changing, if so. And the total deducted should match the amortizable amount. That's how you know you did it right. and every year you just know the amount you need to go put on your form. And again, using a tax software, it will be able to track that for you as well. If you are using the same tax software, every year it will pull the right year amount to have. But it's good to have a record of those assets and how you amortize them or depreciate them. So we do not have anything placed in service during the year we are filing for. Therefore, we'll go to line 43, amortization and costs that began before 2023 tax year. And we'll go to our amortization form, and that will be 2023, that will be 13. So we will go and put 13 on that line. 13. Total amount, that will be line 42 and line 43, colon F. And that will be 13. But if you place asset in service during the year, amortization deduction will be in colon F. You'll total that plus anything you are amortizing from prior year, that is on line 43, and that will give you line 44. So this line 44 will go on if we take Form 1120S for S corporation tax return. It will go on an attached form, and it will go on line 20, other deduction. And if we go to our, we will open the bookkeeping. No, not the bookkeeping. Let's open Schedule L, attachment. So because anything that will say anything that will go under other deduction, because you don't have any specific line for it, you need to attach a statement for it. So amortization will go on other deduction line, and therefore line 20 for Form 1120S. And we can see amortization on line on that attachment, so it is a part of that amount. So if you are filing Form 10CC5, the amortization will go on line 21, other deduction. And since you might have other expenses that will go on that line, you will need to add an attachment to it. And again, it will be included in the list of expenses that will go on that line, amortization. So now the depreciation 652, line 22, the depreciation amount, if you are filing Form 1120S, it will go on line 14. It will go on that line 14. If you didn't put any in on Form 1125A, and if you have Section 179 in that total, you need to take it out of that total. It will go on Schedule K. Line 11. If you are filing Form 10CC5, the total depreciation deduction for 10CC5, you will put it on 10CC5 line 16 A. And then any that you put on form 1125A, you will put it on line 16B, and then you will do the deduction of the two to put it on line 16C. And again, the amortization will be on an attachment, and the total will go on line 21 other deduction. And since we might have some expenses that are not listed here, we will not put that 13 on line 21 other deduction for amortization. It will be a part of the attachment so that we can put the total on that line. So that is how you depreciate business assets under GDS if you are not claiming section 179. Thank you. So now that we have the depreciation down, let's move to the next depletion retirement plan. If you have it, then you will complete it. Otherwise, you will continue. Employee benefit program, energy efficient, other deduction. So other deduction, we will go to our expenses, and we have this one here. So you can see that there are some expenses that we don't have a specific line for it. So we are just going to copy it. It's going to be 1880. That include the amortization as well. So 1880. And you'll add an attachment to your form, and the software should be able to give you option to state your own type of expenses word wise and the amount, and then add that attachment to it for you. Total deduction. So now the total deduction, we are going to use the calculator. Start with 200 plus 139 plus 652 plus 1880, and we have 2871. 2871. Ordinary income or loss. So we will take the gross profit minus line 8 minus line 22. So I'm going to do 1643 minus 2871, and we have negative 1228. Negative 1228. Assuming we have our things correct here, let's continue. But you get the point. Might be a few dollars off, but yeah. So tax and payment. So there are some tax area here. If anything here is related to your business, you read about it and you complete it. Otherwise, I'm going to move forward. So by default, LLC does not pay tax. It flows to the partners, but there are some instances that you might have to pay tax. So when you are filing it for your own business, you can just say no, so that IRS contact you yourself. So when you print the document out, you will sign it and you will put your dates, the date you sign. Other information, Form 1065 Schedule B. Other information. So what type of entity is filing this return? Is an LLC, domestic limited liability company. At the end of the year, did any foreign or domestic corporation partnership own 50% or more of this partnership? Okay, so no. So we'll take no. So you'll read the question and you'll answer. Did any individual or estate own an interest of 50% or more? Yes. So if yes, you'll attach Schedule B1. So we'll go look for Schedule B1. And Schedule B1 has two parts. And I believe the bottom part is what will be needed. Is the bottom part is for individual owning the business. So you'll put the partner's name, and I'm just going to put P1 for partner 1. You'll put the partner's name, you'll put the partner SSN, you'll put the partner USA, and you'll put the ownership. I'm just going to put 50%. And P2 for the partner 2, SSN2, living in and from the USA, 50%. And that's it. And again, it should come with some instruction for you to read through it to see how to do it. And I'm going to save it and close out of that. And it is going to be attached to the form. And this one, we can save it and close it. And since we are done with this one, we can save it and close it. We'll close this one as well. Not sure what I have that there, but so that is done. At the end of the year, did the partnership owe 20% or more of any other corporation on foreign? The answer is no. If it's yes, then you will complete the bottom table. Own directly an interest of 20 or more, directly or indirectly an interest of 50 or more in any other domestic or foreign partnership? No. Okay, so does the partnership satisfy all four of the following? The partnership total receipt for the tax year were less than 250. Yes. The partnership total asset at the end of the tax year were less than 1 million. Yes. Schedule K-1 are filed with the return and furnished to the partner on or before the due date. Yes. The partnership is now filing and is now required to file Schedule M3. Yes. If yes for all of those, then the partnership is now required to complete Schedule L, M1, M2, Item F, and Item L on Schedule K1. So therefore, total assets is now required to complete that Item F, and Item L on Schedule K1 is now required. Item L. Although it's good to track that for your own record as well. Good. Let's scroll down. So we are going to put yes. Is the partnership publicly traded? No. During the tax year, did the partner has a debt? No. Cancel? No. Did the partnership file or required to file a 918? No. At any time during the calendar year, did the partnership have an interest in signature? No. At any time during the year, did the partnership receive a distribution form or is the grantor of? No. Is the partnership making or has privately made or revoked a section 754? No. Okay. For this tax year, did the partnership make an optional basis adjustment? No. For this tax year, did the partners make any optional basis adjustment? No. For this year, did the partnership require to adjust the basis of partnership? No. Property? No. Check the box if during the current year the partner did any property receive? No. At any time during the tax year, did the partnership distribute to any partner? No. Did the partnership is required to file a DA 50A? No. Did the partnership has a foreign partner? No. If you do, there is a form you might have to complete and add numbers here. Enter the number of Form A DA65. No. Did you make any payment that will require to file 1099? No. If the answer is yes, you click yes, and you file on time, you click yes. Enter the number of partner. No, you don't have that. During the partnership tax year, did the partner make any payment that will require to file 1042? No. Was the partnership a specified domain entity required to file a D938? No. Is the partnership a section 721? No. During the tax year, did the partnership pay or accrue any interest or royalty for which one or more partners are not allowed a deduction? No. Did the partnership have an election under 163? No. But again, if you do, you want to read the instruction. Does the partnership satisfy one or more of the following? The partnership own a pass-through entity with current or prior year carryover. The partnership aggregate average annual gross receipts of 20 million. The partnership is a tax shelter. If yes to any, a D980 form is required. The answer is no. Is the partnership attaching a D996? No. Enter the number of foreign partner. No. At any time during the tax year where any transfer between partnership and its partner subject to disclosure requirement? No. Since 2017, did a foreign company directly or indirectly acquire succession? No. Is the partnership required to file 72OA? No. Schedule B continued. B. Under the covered surrogate foreign corporation rule? No. At any time during the tax year, did the partnership receive or award payment for property sale, exchange, otherwise dispose of digital asset, financial interest in digital assets? Well, you might want to read about that. I'm going to say no. Is the partnership electing out of the centralized partnership audit? No. If yes, the partnership must complete Schedule B2, Form 1065. If no, complete the designation things at the bottom. And so here you'll put your name. So we are going to put, I don't know, we can put name, you'll put your address, and you'll put your phone number. But if your partnership representative is a business, then you'll complete the business portion instead. But if it's you, one of the partner, one of the member, you complete the top part with your name instead. Yeah, and the phone number section. And this will conclude part 1 and Schedule B of Form 1065. So how do you complete Schedule K, Form 1065? So line 1 line 1, original business income loss from page 1. We'll go to page 1, line 23, and I believe is negative 1228. Line 2, rental income or loss, we leave it alone. Line 3, we leave it alone. So pretty much we are going to scroll through and we discussed those earlier. So interest income will go on line 5 if the business earns some interest. Dividend income will go on line 6 for original dividend. For qualifying dividend will go to line 6B, and line 6C for dividend equivalent, and royalty will go on line 7. Those are the incomes here. So while we are talking, we can just continue. So, and then you have some other sections, and then you have other income. You can see the instruction for that. And we'll go to the expenses section. So section 179, if you have that, it will go on line 12. We talk about it: cash distribution, non-cash distribution, inventory, and investment interest expense. Will go there and that. And then you have other deduction, line 13E. So let's go to the instruction. I think we are a little bit. Are we? Okay. Let me see here. Let me scroll a little bit further down. So portfolio income, don't reduce portfolio income by deduction allocated to it. So deduction will go on line 13E of Schedule K. Report each partner share of that on their Schedule K-1 using code I or L. Interest expenses allocatable to portfolio income is generally investment interest expense reported on Schedule K, line 13C. So if you have income on line 13C, those expenses will go on Schedule K, line 13C. So report each partner share of those expenses on a boss 13 Schedule K1 using code H. But interest income, so interest income, they are all interest source except tax exempt and so forth. So I'm not going to, but it will go on line 13C. That it will be the interest income, and on line 13E will be other portfolio income, and portfolio income will include royalty. So I will expect them to talk a little bit about royalty, but let's continue to the expense section since they are talking about. Okay, so royalty, we saw it past the income section. Enter the royalty, that's the income here. So, and let's go check 13. So then 13C, yeah, you can see the type of investment income interest that will go on. Investment income will go on line 20B respectively. So it is now but anyway, so include in this line the interest properly allocated to debts on property held for investment purposes. Property held for investment include property that produce income unless derived in the ordinary course of a trade or business from interest, dividend, annuity or royalty, and gain from the disposition of the property that produce those type of income and is held for investment. Investment interest expense doesn't include interest expense allocated to a passive activity. So other deduction 13E. Inter deduction now included on line 12, 13A, 13B, 13C, 13D2, and line 21. On the line to the left of the entry space to identify the type of deduction. If there is more attachment might be provided to specify that, and you'll go on schedule K1 with the appropriate code. For on schedule K1 you will use code I for the royalty income expense related, and then they have pretty much going on here. So royalty expense related to royalty will go on line 13E. So if we go back, the royalty income will go on line 7 of schedule K, and the expense related to royalty will go on line 13E. Other deduction, and you can just tap royalty debt, that's the only things. Okay, line 14, self-employment. Net earning loss from self-employment. So in this area though, in the example that we are using, that we have two partners and we assume both are working in the business, what net earning or loss from self-employment mean is just that out of the income, out of the profit or loss that you have, you will make sure there is no income from passive activity included in it. You want profit or loss from a trade or business activity, active activity generated in profit or loss, and you wanted to know out of the partners that own the business which one works in it, materially participate, and which one didn't. So the one that materially participate in it, they will pay self-employment tax like Medicare and Social Security and income tax on their share of that income. And the one that didn't participate in it is now, they don't really owe a self-employment in my understanding. In this example though, when we say those two people that own this business name type of LLC, we will put the full loss here, and we have that loss on line 1 of schedule K. So that'll be negative 12.28. So pretty much the amount of the profit that is subject to self-employment, that's why you will put there. And they say line 14B, gross farming or fishing income, and line 14C, gross non-farm income. So non-farm income, it will be the income from page 1 1643, the gross profit. Or line A. So I'm going to 1643. When you are using the software, it's just going to put those numbers where they need to go. You are not going to keep repeating those numbers. And the instruction will guide you, explain it to you how you should complete that section. Or if the software is asking you some question that you do not have a good answer for, you can rely on the instruction to read it through. If the partnership is an option dealer or a commodity dealer, you can see that before you do it. So, and there is a worksheet as well. So if the And so let's here. If the partnership is engaged solely in the operation of a group investment program, earning from the operation generally aren't self-employment earning for either general or limited partner. So general partner net earning loss from self-employment don't include the following. Even for general partner, they are considered general partner when they are managing the business. So even for those general partner, you have to make sure the passive income is not included in it. So their net earning or loss subject to self-employment does not include dividend on any share of stock and interest of any bond, unless the dividend or interest are received in the course of a trade or business, such as dealer in stocks or securities, or interest in note or account receivable. Rental from real estate, except rental of real estate held for sale to customer in the course of a trade or business as real estate. Dealer or payment from room or space when significant service are provided. Royalty income, except royalty income received in the course of a trade or business. So you can read through it to see what to exclude. So, and then they have limited partner. Generally, a limited partner share of partnership income or loss isn't included in net earning loss from self-employment. Limited partner treat as self-employment earning only guaranteed payment for services they actually rendered to or on behalf of the partnership, to the extent that those payments are payment for those services. So that's the only case you put those for them. So however, whether a partner qualify as a limited partner for purpose of self-employment tax depend on whether the partner met the definition of a limited partner under section 1402. And if you copy section 1402 and search it on Google, you should be able to find the tax law related to it and read about it. And then you have that. So, and use the worksheet below to calculate the amount. Schedule K-1. Don't complete this line for any partner that is in an estate, a corporation, or any organization, or an IRA. So, but that is the worksheet that you'll be able to complete and determine what will go on line 14A. And you can see there include each general partner share and each limited partner share of line C in boss 14 schedule K1 using code A. So subtract line 4B from line 4A. So line 4A is guaranteed payment to partner, limited and general, whatever they are, and part of line A allocated to limited partners is this one. So they are taking 4A minus 4B to find 4C, and then they have line 3 that is include each general partner share of line C on schedule K 14. Did you shower? Good job. Come here. Love you. I'm recording. Everybody shower? Okay. Okay. Now go up. I'm recording. You guys can start using the computer and start a schedule. Who is showering? When that person is shower, you guys can start, okay? Okay. So, yeah, and you just read through it. It'll walk you through it to remind you of what will go in it. Again, if you are using the software, it should do that. So you can see that on the first one is asking you to put schedule K line 1 number, which is that negative 1228. Any net income loss from certain rental property instructions, and net rental for schedule B. So pretty much the income side of schedule B some of those income are getting included. Uh, Income portion of Schedule K, some of those income are getting included. So net loss from Form 4797 Part 2 is getting included. So you'll combine line 1 to D, net gain from Form 4797 Part 2 line 7 included. So you'll add it back, you'll subtract it out of it. Part of line 3A allocated to limited partners, you'll add it, and then you'll subtract from line 3B, line 3A. If line 3B is a loss, reduce the loss on line 3A by the amount on line 3B. So include each general partner share of line 3C, which is line 3A minus line 3B. You'll put that on Schedule K, boss for on Schedule K-1, boss 14 with code A, and then they continue that. So okay, so let's assume that in our case both partner work in the business, they are general partners, and that's the only number we have on here. We will put it on 14A. So 14C, if we go back to the instruction, it'll go on Schedule K1 with code C. So enter on 14C the partnership gross non-farm income from self-employment. Non-farm income from self-employment. Individual partners need this amount to figure their net income from self-employment under the non-farm optional method of Schedule SE Form 1040 Part 2. Enter each individual partner share in box 14 of Schedule K1 using code C. And then and I think they have some instructions for the worksheets continuing all the way there also. But yeah, so now that we have that figured out, we'll go to credit. So you can read through the credit to see if you have some credit there that you can claim. I'm going to skip over it. For Schedule K2 is for international, foreign. We are going to leave that alone. Alternative, minimum tax. Again, if you are using a tax software, you should be able to determine if something there needs to be completed. Other information. So under information, you have 18A, tax exempt interest income, other tax exempt income, non-deductible expense. We are going to put 140 here. Because we do have 140 in our, at this point, I think I can close the depreciation spreadsheet and open the bookkeeping. Okay, I think it did it already. Okay, so I think there is non-deductible expense 140. We'll enter that. Line 19A, distribution of cash and marketable security, distribution of other property. You can retrieve that matters to your business. Line 20A, investment income. Line 20B, investment expenses. Line 20C, other income and amount attached. So this will be related to QBI qualified business interest. But yeah, let's just assume so. QBI on Schedule K, though, you are not going to enter anything there, but Schedule K-1, you will do things there. So, and then line 31, total foreign tax pay or accrued. So, we'll come back to line 20C. So, analysis of net income loss and return. So, we are going to use limited partner, and I'm going to assume both partners are active in the business. Therefore, we'll put negative 1228 there. But again, it'll be a good idea to read it. When you are using a tax software, depending on how you are manipulating the partnership Schedule K-1 information data is going to affect where the numbers will go, whether it is passive or active. The instruction, though, is a little bit on the confusing side for me. Let's see if we'll be able to find sorry if it's a little bit bothersome to scroll this way. Okay, page 58. Analysis of net income loss per return. Report all amount for LLC members on the line for limited partner. Since we are filing for an LLC, they say to use limited partners line. So they continue and say that classify as passive all limited partners in a partnership whose principal activity is a trade or business or rental activity. It's kind of confusing. So if they want all LLC members to be considered as limited partner by putting their numbers on limited partner line, if those members actively materially participate in the business, saying to put their numbers on underneath passive, I've kind of found a little bit weird. I know that by default limited partners mean they didn't work in the business. General partner did. But then when they say to put all LLC members as limited partners, and then they say to to classify them as passive, is a little bit confusing. Are they talking about limited partner that doesn't work in the business? So it's just, you can read it through and decide for your business. So now he say here that in classifying partners who are active, who are individual as active or passive, the partnership should apply the rule below. In applying those rules, a partnership should classify each partner to the best of its knowledge and belief. It is assumed that in most cases, the level of particular partner's participation in an activity will be apparent. If the partnership principal activity is a trade or business, classify a general partner as active if the partner materially participated in all the partnership trade or business activities. Otherwise, classify the general partner as passive. But then they say classify all LLC members as limited partners. So, using a partnership tax return to file for LLC and partnership, I don't know if we had to make a distinction here by considering it as partners that work in the business as active. So in these things, though, I assume so all LLC will go under limited partner section as instructed, and based on their participation in the business, I'll choose whether it is active or passive. And since In this example, we assume both participate in the business. I'm going to choose active and put the amount there. But again, that is my thought on that. And then we have the balance sheet that we are not required to file. We have Schedule M1 that we are not required to file, and we have Schedule M2 that we are not required to file. This concludes how to file Form 10CC5 and Schedule K for 2023. How to file Schedule K-1 Form 1065 for 2023. So when you use the tax software to file your return, by the time you are done completing 1065 and Schedule K, you'll have a lot of information on your Schedule K-1, but you still need to go check. So you want to make sure your business year identification number that we are using in this example is on Schedule K-1. So make sure yours is accurate. Your business name, automatically the tax software will pull it to your Schedule K-1. You are now going to type it again, and for your state 1065, the tax software will automatically send information to your state Schedule 1065 and your state 1065 Schedule 1 as well. Therefore, you are not going to reduplicate the information that you already put somewhere on any of those forms. That will save you some time, and of course, it will cost you some money, but it's still going to be less if you are filing it yourself compared to somebody else is doing it for you. So if your business is now complicated, is new, you'll be able to file it yourself using a tax software. And IRS Center, where partnership file return, if you are going to e-file it, you'll just put online. The software will do it for you. If you print it out and mail it, it will be Ogden. Otherwise, we can go to the instruction and go to where to mail the return. And you can see where it's going. And in this example, it's going to be Ogden. Okay. D, check if this is a publicly traded. No. Again, if you have two partners in your business, you'll have two Schedule K-1. The sum of Schedule K-1's numbers will match your Schedule K respective lines or box. So in this example, we are going to have two Schedule K-1. Therefore, I'm not going to complete. Since I'm not putting that much of information in it, I'm going to just do it. So the first one is going to be SSN1 for the Social Security, and the name is going to be Partner 1. So we are going to choose limited partner or other. Okay. So you have general partner or LLC member manage. And then you have limited partner or other LLC members. And technically, limited partners that are now working in the business, that's what I like to check that box for. And LLC members that are working in the business, managing the business, check this box G for it. But again, it's going to affect how your Schedule 1 will be completed. I think, let me see here. I'm going to go a little up here. to see if we have more information on it. Okay, complete item J on all Schedule K-1. If a partner hold interest as both a general and limited partner, check both boxes and attach a statement for each activity that show the amount allocated to the partner's interest as a limited partner. Okay. Well, I will suggest you use your best judgment on that. But by default, in my understanding, limited partner means they are now working in the business, and general partner means they are working in the business, LLC or other or partnership. But yeah, I'm a little bit conflicted choosing that one. The best scenario would be to choose both, though. But anyway, the reason why it's confusing is because of what they say on page 58, I believe so, saying to related to the net income activities to use the limited partner for all LLC members is what makes it confusing for me. So don't quote me on this one because I'm a little bit confused on both. I do have 1065 for a business of ours, but it's a passive type of business. Therefore, in fact, two of them. Therefore, it's easier to just check the limited partner on it. Okay, so and let's see what else do we have here, that and what type of entity is this partner. So you'll put individual. So partner share of profit, loss, and capital, assuming it's just the same, it didn't change, we'll put 50%, beginning, ending. If there is a loss, it will be the same. Based on that, you'll distribute the profit or the loss of the business. So and there is no decrease, so we are going to keep it like that. And we do not have anything for, we don't need to complete this section if it's not related to us. Schedule K2, Schedule K3, boss L, we don't need to complete, we are not required to complete, so we are going to leave it. Did the partner contribute properly? No. And partner share of net unrealized, we'll leave it alone. And we'll go to box 1. So box 1 is going to be to take Schedule K1. So pretty much we'll go back to Schedule K1 to make it easier for you to understand. Every line of those Schedule K has their corresponding boxes on Schedule K1. So line 1 of Schedule K, we'll divide that in 2 because each partner has 50% ownership, and we'll put it on Schedule K1. So I'm going to pull my Trusty calculator out, and negative 1228 divided by 2, 50% is negative 614. We do not have anything on line 2 of the Schedule K. Therefore, I'm going to just go through it, and we have something on 14A and 14C. So you are going to go through it. You can see they are just the same compared to Schedule K, but on Schedule K1 they have boxes that you are going to put code on, and we'll go to, we'll put code on some of them. So 14, and we are going to put code A, and we'll put negative 614. Negative 614, and we'll put code C, and we'll put what? The amount, the income, we'll put 1643 divided by 2. And again, what I'm doing is 1643 times 0.5, like 50% ownership. So if I go back, one will be like this because I'm rounding. And let's see where else we have numbers on. $18C, that'll be 70, right? So $18C, 70. So we need to go find the code for that one, and brace yourself, I'm going to scroll a little bit fast. $18C, consent using code AC to attach a statement to schedule K-1. Okay, so we are, since it's 18C, we are going to use code C, because line 18 has A, B, C. So yeah, so we will use C, code C, and we'll go back to schedule K, and we have 20C as well. We don't have any information here because we'll add an attachment, but 20C we will use code. Let's go check because it's QBI. And is related to other information, 199A, I believe. So section 199A, information code Z. So they say that use Z asterisk on each partner schedule K and put STMT in the dollar amount space. Therefore, you'll add an attachment to specify. So pretty much what if the is QBI, is not interest, is income. So qualified business income. So the way it works is from your 1065, you'll put information like the profit or the loss. If you have employee, you have W2 wages and depreciable asset, a portion of it will go on that worksheet to be able to determine the QBI. So we'll have Z asterisk, and then we'll put STMT, if I got it right here, and then we'll use an asterisk for it. We'll use an attachment, and that attachment will have the detailed information, and the detailed information will include let's go to the worksheet. I'm not going to trace it, and then you can read through it, and while you're at it, if you have a rental real estate, so rental real estate may constitute a trade or a business for purpose of QBI deduction if the rental real estate rises to the level of a trade or business under Section 162, satisfy the requirement of the rental real estate safe harbor, meet the self-rental exception, and with the determination of whether a rental real estate constitute a trade or a business for purpose of the QBI deduction is made by the partnership. So the partnership might first make this determination and then only include the distributive share of the rental real estate item income gain loss deduction from a trade or business on a statement provided to the partners. So rental real estate that doesn't meet any of the three conditions noted above doesn't constitute a trade or business for purpose of QBI deduction and must not be included in the QBI information provided to the partners. So since this one does not have real estate in it, there is something we want to pull as well. If you pull your information on page 1 of 1065 and your business is a trade, business activity or service, you might want to read about the SSTB section. So SSTB excluded from qualified trade or business. SSTB are generally excluded from the definition of qualified trade or business. And SSTB is any trade or business providing services in the field of health, law, accounting, actuary, science, performing art, consulting, athletic, financial services, brokerage services, investing and investment management, trading or dealing in securities, partnership interests or commodities, or any other trade or business where the principal asset is the reputation or skill of one or more of its employees or owners. The term any trade or business where the principal asset is the reputation or skills of one or more of its employees or owners mean any trade or business that consists of a trade or business in which a person receives fees, compensation, or other income from endorsing product or services. A trade or business in which a person licenses or receives fees, compensation, or other income for the use of an individual's image, likeness, name, signature, voice, or trademark, or any other symbol associated with the individual identity, or C, receiving fees, compensation, or other income for appearing at an event or on radio, television, or other media format. So partnership might separately report QBI information for all trade or businesses engaged in by the partnership, including SSTB, but must identify which trade or business are SSTB. So that is that. So it's very important to understand, because the QBI things is for the partners to be able to see if there is a credit or deduction or what that they can claim on their 1040. So it's good to understand that, and pretty much the information that will go on the QBI is those. And we are going to, and the lesson now to aggregate trade and service together. So that is they have a flow chart here to help to guide you, but then they should have a worksheet. So they say that the SSTB or PTP can be aggregated. Yes, the W2 are amount paid to employees described in section 6051. If the partnership conduct more than one trade or business, it must allocate the W2 amount among its trade or businesses. So the unadjusted basis, I don't know if you notice it, that is the asset. Oh, not too file. Those are pretty much things that will be in the QBI. So you have the income or loss from your 1065, that negative 1228 for instance. You have the W2, and you have the assets portion. So those three might be more common to see as well. And the PTP, they'll be able to explain it as well as we go down what the PTP is. I'm not going to go through the and I'm going to go to the unadjusted basis of qualified property is figured by adding the unadjusted basis of all qualified assets immediately after acquisition. Qualified property include all tangible property subject to depreciation under Section 167 for which the depreciable period hasn't ended, that is held and used by the trade or business during the tax year and held on the last day of the tax year. The depreciable period ends on the later of 10 years after the property is placed in service or the last day of the full year for the applicable recovery period under Section 160A. Again, it's good to use the tax software to file the return, and the tax software should be able to know how to classify those things for you. But then they have, those. So if you go through that, statement 1 for instance can be used, and this one you use that for the Schedule K itself, and then you'll have Schedule K1s for each. You'll have a version for each Schedule K1. So that's why you'll have the partnership name, partner name, share of the partner. So anything that the statement A for Schedule K will be divided. You'll put the partner portion of it on that partner's statement A QBI statement. So, and if you didn't aggregate anything, you want to check it. If your business is a service, then you will check that SSTB. But they try to have multiple type of business here. If you have multiple activities together that you conduct under one LLC. So the ordinary business income in this example though, that we have our income, if we go back to our 1065 or Schedule K1 will work to line 1, Schedule K line 1, or original business income line 23 negative 1228. When you take that for the partner, that will be half of that, so that will be that's 614 negative. So for the partner, that will be that negative 614, and then the W2. But then you see there are other things that they are asking about as well. And then you have W2, and the W2 is 200. Therefore, the partner will be 100. That will go there, and then you have the property, qualified property, and the software will be able to find the assets, the portion of the assets value that will go there. So the qualified property, the unadjusted basis for the business assets, that will go there. I'll do that for each Schedule K1, and that attachment will be added to your Schedule K1 for line 20 with code Z style. And I think, and this one we can save it. And then we can create the second one and that conclude one schedule K1. Now we can pretty much, because they are 50% ownership each, we will create a second one for the second partner. So partner 2, everything else will remain the same, and we will save it. As partner 2. Why not? Now we have both. So when you take both, you total each line, it should match the corresponding line on schedule K 1065. So now that we did that, let's open one completed with one completed that we can use to see the attachment to schedule, the attachment for the QBI. And this one is completed using a task software. So the numbers might be a little bit different. Let's see. The cost of goods, the rounding here is a little bit different. So 1643, that we have 1642. Okay. The depreciation, I think we have 1642. So yeah. Okay. So those $2 amount can affect the ending result. We have 28 negative, I believe. 28, like 1228 instead of 1230. Okay. But it's not really what we are here for. So let's continue. Angelique. Those kids. I told her she's not going to do laundry while I'm recording. But anyway. So, yeah. So let's continue here. So that is 14A and 14C. Let's scroll quickly. Okay. And we have that non-deductible, and you can see that that line by default is now yeah, there is a line that I didn't complete on 1065. Let's go back to our schedule K. Was it schedule K? Yeah. No, that will be at the end of schedule K. That is this line here. So net income or loss. So you combine schedule K1. Angelique, who is in the basement? Open the washing machine and tell Angelique that she's not going to do laundry while I'm recording. open the machine, the laundry machine, please. Thank you. And let your sister know that the laundry is not getting done just yet. Yeah, I'll do that when I come up. You guys can start using your schedule. Gabrielle, I'm recording. I'm not going to comb your hair just yet. Oh, those kids. Net income loss. Combined schedule K line 1 through 11. Line 1 through 11. And from there, subtract line 12 through 13 and 21. Line 1 through 11. And from there, you subtract line 12 through 13. We don't have anything there. And 21. So we have 12, 28 negative, and they say 21. Okay. So we are going to put negative 12, 28 there. Yeah, we missed that line. Okay. And yeah, they put it on that. Let's continue. Yeah, this one was have $1 up there. Excuse me. Schedule B 1, and then we have the partners. So the partners here, we missed that one as well. Let's check our schedule here. Schedule K-1. Depending on the question that you answer, the software will be able to check the right box for you. But it's good to look through it. So domestic partner and foreign partner. So for LLC, living in the US, owned by US citizens, the partner is a domestic partner. It is. So you will check that. So we need to do that for the other one as well. If I go back to the partner, we will check that for the partner as well. When my children don't see me for a while they know that I'm at home, I'm not working, yeah, they usually like to be where I am, or they'll start acting up in a way to bring me to them. So I think they are getting to that point. So domestic partner, so that is selected. Individual, we have that. They are 50%, 50%. So when we go back up, let's go down a little bit. Okay. And when we go up, they put asterisk because they will attach a statement. And so in the breakdown for 14 with code A and C, have that, and then we'll go to 18 C, like 70, and then line 20, excuse me, Z star. We'll go to the QBI. So QBI for partner 1, you can see is using the portion, the partner's portion of the loss or ordinary income or loss. Is using the W2, half of it, and then the portion of the asset that they justify qualify for the property, the UBI, the partner portion, and they set down, and the QBI is statement A that is completed. And then we'll go to the attachment. So that asterisk they have on there, they have none. Just go back. Then they have the attachment to specify that income is a non-passive ordinary income included in line 1. That is that amount. So they'll have that for both partners. So this, you can see, for 50-50 will throw to 100. So the ownership should not be more than 100. The partner is 100%. The partnership is 100%. The partner's ownership total will total to 100. So if it's just you, chances are you won't even be filing 1065. You'll be filing Schedule C. But if it's 2 members or more, you'll file 1065 unless you request to be taxed as 11 as S corp and file 1120S. So if you're filing 1065, the number of partners that you have, the ownership should throw to 100 when you total all of them. So this one is partner 2, and because 50-50, that entry will still be the same as the previous one that we saw, and the QBR related to that part 2 person will be that. There is something I was saying before when I was doing this. One partner, because I 50% of this number was that, and the other one will be 2. Because again, it needs to total to the full amount. And yeah, that's why, because we use 1643 times 50% to find that number. If I'm using this, then I need to use this to find the full amount that was on Schedule K, 14C. The full amount. So those are things to consider. The software will do it automatically for you. But if the number is divisible, like based on the partners, the number of partners that you have, the ownership that you have, you may not have to deal with those decimal points. But then we have that and the attachment to that partner, and then we have the depreciation that will go through, and the supporting document. So I try to just put them all together to have that. And then the QBI for the LLC itself, which will be the total that is used to split between the partners that we come across. That will have the full original loss income, the W2, and the just a business asset basis of depreciation. Yeah. Thank you so much for watching. I'm Afiavi Liberman, creator of Liberman Consulting LLC YouTube channel and ninasub.com, our blog. We thank you very much for watching our videos. We thank you very much for your time, and thank you very much you all that subscribe to our channel. There is something I didn't point out though, is where to mail your 1065. So if you want to paper mail it, you might want to read the requirement for electronic filing. If there are other tax forms that you file, including W2, employment tax, unemployment tax. If you file, if you have more 10 or more returns to file, you might be required to file your 1065 electronically. Other than that, if you have 100 partners or more than, yeah, you might be required to file electronically. But other than that, if you that does not concern you, and you can still file it electronically. But if you want to paper file, the instruction, the software should be able to direct you, but it's good to double check it with the instruction as well. Find the state your business is located in, and based on the total assets of your business on your 1065, here we don't have anything there, you'll find the where you will mail the address that correspond to your state based on the assets. And for Iowa, for instance, any amount is going to Ogden. Therefore, that's where that will go. That's where that will be mailed to, and you'll mail it via USPS certified mailer to have a tracking. And if we go a little bit up, when you are done filing the return, you'll need to sign it. So if you are filing a paper form, you might want to print it out, sign it, make a copy. A lot of states will require a copy of your IRS form. Now the Schedule K-1, but the 1065 and the attachment. Therefore, you'll make a copy for the state, you'll make a copy for your business record as well. But you'll sign it first before you make those copies. And you can read who should sign that. It will be the partners or LLC members, or the general partner or LLC members that are knowledgeable of the business. So pretty much you might want to read through it to see who is supposed to file the form. And if we go back to the top, you will print, you will sign, you will date, and you just leave the pre-preparer option only. Is for people that are filing and getting paid for it. But if you are filing for your business, you do not need to complete that section. Thank you. On our our blog and on our channel, we share different ways you can save money and different ways you can make money to reach your financial independence, where you do not depend on an employer to provide for your family. And filing your own business tax return is a way to keep your business expenses low. It takes time to do that, but at the same time, if your business is young, it allows you to know how to track your financial data in a way that you'll be able to file the return accurately. And when you hire somebody to file it for you, you will be able to provide the right data for the person to work with. And on our at liberdownload.com, you'll be able to find templates that you can purchase to manage your finances and your business. And at ninasoap.com, our blog, we have free download session that you can go through to see if there is any template there that you are interested in. We have financial template and business templates. And a little bit above the free download session, we have the federal tax form instructions, and we try to save links, IRS links to some forms that you'll be able to download it. Not download it, but when you click on it, it'll take you to IRS page where the form is, and you'll be able to download it. Thank you very much. Just keep in mind that if you are using a calendar year for your business, the 1065 is due by March 15. Thank you.